Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, both China and Germany are adjusting to live with the US tariff challenge. But first in the US, gradually rising interest rates have yet to dent Americans' appetite for borrowing, with the total stock of household debt climbing to a record $13.3 trillion by the end of the June quarter, up 3.5% in a year, which incidentally is less than the nominal growth in US GDP, which grew 5.4% over the same period. Mortgages are more than two-thirds of the total debt, and these grew 3.5%. Student loans are a bit more than 10% of the total, but they grew at the rate of 4.5%, and car loans, which represent a bit more than 9% of the total household debt, grew at 4%. Credit card debt is a smaller proportion, just 6%, but it grew at 5.7%, the only component to grow faster than GDP. In China, consumption is slowing, even if it is still at a high level. Retail sales rose 8.8% in July from a year earlier, but well below the 9.1% growth expected and down from 9% in June. It is more than retail activity that's slowing, however. China's industrial production in July came in at 6% growth, also well below expectations and the June levels. To keep domestic demand up, China is loosening its recent debt rules for banks, and it is raising infrastructure spending, especially on high-speed railways. China's data is in sharp contrast to that from Japan, where industrial production actually fell 0.9% in the year to June. And the German economy grew faster than expected in the second quarter, driven by higher household and state spending, suggesting that it is powering ahead despite the threat of a major trade dispute with the United States. This data helped the overall EU GDP growth rate, which was revised up to 2.2% real for the June quarter. Overnight, the Turkish currency had a small rebound, but Indonesia's currency is the latest to take some depreciation hits, and they're preparing to shore it up. In Sydney, residential vacancies have hit a 13-year high. Property investors have been hit with falling rents from these rising vacancies as the country's largest city gets an unexpected boost in supply from new dwellings. Economics 101 is at work here. The US Treasury 10-year yield is firmer at 2.9%, with the US 210 curve still at 26 basis points. The Aussie 10-year is at 2.59%, that's up 1 basis point, while the Chinese government 10-year is at 3.58%, that's down 2 basis points. The New Zealand 10-year is at 2.6%, that's unchanged. Gold is still at its 18-month low, holding after the sharp drop yesterday, and now just on $1,194 an ounce in New York. And after a small jump late in the day yesterday, US oil prices are softer today, now at just $67 a barrel. The Brent benchmark is now just on $72.50 a barrel. And the Kiwi dollar is starting today little change from yesterday at 65.8 US cents. On the cross rates, we're a little firmer, however, at 90.9 Aussie cents and 58 euro cents. That puts the TWI at 70.1 and rising for the first time in a week. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.